And think about what the NASDAQ has done. The NASDAQ has continued to go up, at least 5-6% since then, maybe even 7 or 8%. Yet Bitcoin has not been able to break up. That's concerning for me as an investor.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
A lot of money has been bleeding out of altcoins into Bitcoin. Is that something you've observed?
Yeah, there's no doubt about it, right? So we know we don't know any of the security classifications now that have to do with what the securities of crypto will be, and I think that's just keeping so much. I mean, I can't find any big funds or big institutional money or major money that's buying altcoins right now. I can find ones that are buying Bitcoin. So that's the difference maker right there. And I still think Bitcoin dominance based on the chart. It's interesting because he uses different metrics than I, but both our metrics show Bitcoin dominance going to about 58%.
What does that mean in terms of price? Does that mean the rest of the altcoins will continue to just collapse? Or do you think Bitcoin will rise a lot and then everything else just stays flat?
That's the question, right? So there's the two scenarios are Bitcoin falls a little, the altcoins fall a lot, or Bitcoin rises a lot and alts rise less. And so either way, this just kind of continues to impress upon investors that probably the place to be if you're holding for the next 6 months is in Bitcoin, 6-12 months. If you're playing quick little trades, obviously alts can outperform, but for the midterm, it's probably Bitcoin is your best play in terms of return.
It's gone up almost like you pointed out, 80%, 90% since its lows last year. That's a big move, Gareth. I wonder why the altcoins haven't outperformed Bitcoin during this bull run upward. We're seeing the reverse happen.
And that usually happens, right? You have a risk-on environment and the alts usually go nuts. But you know what?
Exactly.
The alts are seeing this major kind of infusion or of fear from the SEC, right? So that's really what's going on here is like the SEC has now made it so that you don't know if an alt is worth 10% of what it is currently or if it's worth 10x of what it is right now. And so without clarity, it just keeps so much money on the sidelines. But I'll tell you one thing, and I've said this to so many people, that if we get clarity with the alts, like let's say they come out with rules for these altcoins that are securities and we can see clearly, then we can value them. And you might find that like a Polygon or a Cardano is maybe valued way too low right now. The other side of the coin is it could be the opposite too. And that's what we just don't know as investors.
So let's talk about Bitcoin, finish up on Bitcoin. $30,000, that's the range. Everyone wants to know what's going to make that range break out.
Yeah. So the breakout, if you're looking for what that could be, it could be a approval of a Bitcoin ETF. It could be the stock market continues to rally and risk on continues here, in which case eventually you would assume risk on means Bitcoin heads up as well. So those would be the positives that investors should look for. The negatives, which I think there's more negatives out there. If you see the stock market topping out, let's say the stock market even has a 10% correction from this massive run we've been on over the last, since October of 2020. If that starts to panic investors, do we see exiting and a breakdown on Bitcoin? So for me, it's watching this range. Obviously, it's a very tight range, and whichever way it breaks, I would go in that direction in the short term.
I'm just thinking if the capital bleeds from the alts into Bitcoin, could it also bleed from the stocks into Bitcoin? Meaning if, let's say, in your example, if the S&P goes down, let's say 10%, would that 10% partly go into Bitcoin and push the price up?
It's always possible, but I don't think Bitcoin has matured enough yet to be a risk-on asset yet. So again, I think that's the key, is that, or a risk-off asset. And so I think at this stage, if fear hits the overall market, and we've even seen this during COVID, even gold early on in COVID sold off, and that's like the classic risk-off asset. And so I do think that right now, investors should assume if you have a stock market sell-off, you'd also get Bitcoin to come in a little bit.
The bottom line for Bitcoin, it hasn't sustained 30,500 for 5 days yet.
Right, 30,000 for 5 consecutive days. And I think also just take a look at this. I mean, we were on April 14th, Bitcoin hit 31,000. That was April 14th. We're now at July 7th. And think about what the NASDAQ has done. The NASDAQ has continued to go up, at least 5-6% since then, maybe even 7 or 8%. Yet Bitcoin has not been able to break up. That's concerning for me as an investor. That's concerning for me as an investor, and has to be kind of monitored.
Is it concerning for you as a trader, though? If you're looking at it from a shorter times perspective, what's your play here when you're looking at this divergence? Do you sit out? Do you sit on the sidelines? Do you get in? Do you short? What's your play?
Yeah, so I'm short a little bit right here. Just looking for a breakdown. My cover is very obvious, like we talked about. Any 5-day close above 30,500. It's a simple, easy, low risk trade because the risk is minimal here. It's only trading $200 below that level. So for me, I'm a risky trader. That's what I do for a living. For the retail crowd, I would say sit on the sidelines and watch to see if we get above that 30,500 level for those days. And then if you want to hop on board to 35, I think that's open to do.
This range has been consolidating for quite a number of weeks to months, like you mentioned. I would want to wait to see momentum gain either on the downside or upside and consolidate in either of those directions before I'm more comfortable jumping in on a trade. How would you respond to that?
Yeah, I would have no problem with that. Being safer is always the better plan in the investing world. It's people that try to 10x their money overnight or in a month that usually end up losing it. So again, everyone should stay within their zone. There's nothing wrong with waiting for the next consolidation. In fact, you could argue that it's making bullish consolidation right now, which could be setting up for the next move up. Again, we have to see it get above that key level for that many days.
I'm just curious, extending not just for Bitcoin, but extending your analysis to anything, basically, because you are a swing trader. How do you apply swing trading to something that hasn't been swinging? It's just been flat.
Yeah, so a swing trader, you're right. You're in it for weeks or months, and you're not in it for the long term. You're not making trades that you're holding for over a year, which would be a long-term cap gain. And so basically what you're doing is you're analyzing sideways consolidation and seeing if it's bullish, and then does it start to break out and hopping on board. So that would be the way you would treat this trade on Bitcoin. The sideways consolidation is known as bullish consolidation. I'm skeptical of it because of its lack of performance with the NASDAQ. But again, if it does what I said it could do, then you do have a clear shot, or at least you should have a clear shot to 30,500 or 35,000.
35,000. Could you make the argument that the longer an asset consolidates, the bigger the next move will be, either on the downside or upside? Does that usually happen that way?
That is absolutely correct in terms of education. So think about like this. Think about, if you're a marathon runner and you just ran a marathon, which is what a big move would be, and you need to take a rest, right? You need to refuel. You need to rest your body. If you only get 1 day of rest and then they say, go run another marathon, it's kind of hard to do. But if you got a month off between, which is a lot of consolidation, a lot of sideways rest, you can run that next marathon and probably complete it really, really well. So great analysis there, absolutely. And same thing on the downside. If it starts to break down, then chances are it's going to be a big breakdown.
Any downside risk to the stock markets besides the obvious, besides recession and economic downturn and
besides the 20 different risks out there that could be that the market's ignoring right now. Yeah. I mean, that's the kicker, right? Is that the market is in this zone. And I've seen this in past cycles. It usually occurs at the end of a cycle move where the markets kind of get in this euphoric sense. We saw it in 2021 where no one cared about any of the possibilities of the Fed hiking and the markets just went up until the Fed finally took it and started to hike. And then we saw that correction begin in the markets. And so we're in that same zone. I think risks that the markets are ignoring. You have China with Taiwan. There's been some kind of, some crazy comments coming out from both sides, the US and China, but China just recently saying that the US has turned Taiwan into a tinderbox by selling military equipment to them. Then you have obviously the comments from Biden, accusing Xi of being a dictator that didn't go over well, and some vice versa tit for tat in terms of trade stuff. So I think that's a factor that we have to keep an eye on. I think the bigger one for me is the macro data, right? The market wants weaker jobs numbers, but the key is the market wants just a little weaker jobs, just enough to make the Fed stop. If we slip down and we start going negative on jobs on a monthly basis, guess what we're going to start hearing? Oh my goodness, it's going to be a recession. A recession with inflation is called stagflation. And again, that is not what we want to see. That in fact would be an atrocious situation for the stock market and for investors. So there's a lot of risks out there, but If you look at the VIX remains relatively low, which means markets and investors are ignoring these risks.